Hey, WheelSnipeSelly here. It is Friday, March 18th. We are starting the Topstep trading combine. This is my attempt number 3. My second attempt, the last trade I took was on November 21st. So it has been almost 3 months since my last attempt. So we'll kind of see how it goes. This will be the only time that I mention this, but if you are interested in doing the Topstep Trading Combine, I do have an affiliate link that'll get you $50 off your first trading combine. So if you're interested, you can check that out. So I just kind of wanted to go into, I'm kind of breaking this video up into 2 sections. So I have trade and risk management. Anyone that's going to be kind of following along, just kind of see what I'm doing. You can kind of stay for this part, and then I'll kind of go over some of my pre-market routines and kind of what I'm doing throughout the day. I kind of have this all typed out. I'm just hoping that this could help anyone that's going to be going through the Topstep Combine. Just kind of see what I'm doing. I'm just trying to see if this helps out anyone. But yeah, just leave me a comment below and let me know what you guys think. So we'll go into the trade and risk management. So we have a 3K profit target for our 50K Topstep account. So I'm just targeting between 1% and 2% a week. So I'm looking for between 500 and 1,000. And I'm not shy of doing, if I get into a trade and I just get 3 handles, I'm totally fine if I were to get 150 a day. So that could totally get me there if I need to, do smaller targets. So I'm looking for anywhere between 3 and 5 handles. So getting that, we're shooting for 6%, so 3,000. My max loss for the day is going to be 500, so two losses at 5 handles. And I just have in here, like, if I get in and like that trade doesn't feel right, I'm just giving myself permission to cut it at any time, and if 3 PD arrays are broken, you're wrong, and it's gonna go the other way. So I want to have this in here that just because you get in doesn't it doesn't mean you can't just cut it if things aren't feeling right. I also have a time limit in here, like if we don't have movement within the first 10 minutes, I'm going to consider cutting the trade. Normally ICT says if it doesn't move within 10 minutes, you're either too early or your bias is wrong. So the stop placement must be at a minimum of the fair value gap candle high or low, or the nearest swing high or low. And we can only move the stop up when there's a bigger, larger shift in structure, or if price has moved 50% of the target. We can raise it 25%. I'm doing 1 trade max per session. 3 max per day. So 1 in the AM session, 1 in the lunch session for buy stops or sell stops, whatever the AM stops are, and then once in the PM session. Max of 2 wins per day, even though I could take three trades max. So if I have 2 wins, I'm done. If I have 2 losses, I'm done. If I hit 3 losses in a row, I'm forcing myself to go down to the micros with a $100 risk per trade until I make back half of my losses from the 3 trades. So just note that. So ES, I can only ever trade 1 contract, take profit of 5 handles or 20 ticks, stop loss 5 handles or 20 ticks or less. Ideally, I could get a tighter stop, but it's all dependent on what the setup is. My MES for the micros, I can trade up to 5. The max risk is still it would be 200 on this. So if I do 5, actually this is supposed to be 250. So whatever my stop loss would be, that would dictate how many contracts. So there's a little bit of math that I have to do if I'm doing more than 1. Partials are allowed with MES if I want to take partials. All trades must be recorded with voice narration for YouTube journal. Includes Topstep dashboard and the Notion trading log. So I'll show the dashboard every day, no matter what. But for the Notion trading log, I have a trading kind of journal, like Excel type thing. And then I'll show you guys the calendar. Let me know in the comments if you would like to see this stuff. I know it might help some people who haven't really started a journal, but just kind of see some of the things that I'm noting. But yeah, just make sure you leave me a comment in that first video if it's something that you guys are interested in. It's going to make the videos a little bit longer, but yeah, just let me know. So mark up each chart with a buy side, sell side taken, displacement, market share shift, fair value gap, order block, and take profit. So I'll tweet out my videos once they're published on YouTube, and then all my trades will be journaled, printed out into my physical trading log, along with, I kind of do like a recap on my chart. So that's the main part about the trading risk management. These other sections are going to be just kind of like my routine, what I'm looking for, things like that. I think it'll be helpful for anyone who's trying to do this. If there's anything that I have here that you may not have jotted down. So I have the algorithm macro times. We got 9:50, 10:10, 10:50, 11:10, 11:50, 12:10, 1:30, 2, and then 3 to 4. The main macro within the 3 to 4 is the 5:15 to 5:45. Or sorry, 3:15 to 3:45. So it's 15:15 to 15:45. Okay, so my routine. So normally every day while I'm eating, I'll read my mission statement and my daily trading pledge. Just kind of puts me in the right mindset, so I don't try and overtrade. Just the more that I do it, the more I'm kind of instilling it into my process. So I'll review the overnight session. I'm looking to see what was that trading. What did it look like? Was there a setup that I would have taken if I was in the London session? And how does that kind of play into my daily bias? So you can read this here if it's bullish or bearish. Normally what we're looking for. So I'll have a notepad with my key prices and levels. I write down my intentions for the day. I look at the range. If I'm bullish or bearish, I'm looking at the daily and the 4-hour. And then I also want to write down, like, if it trades down to this level, it invalidates my idea. So always want to keep power of 3 in mind. I have the economic calendar, so just looking at any news events, we want to have that so we don't get caught off guard. I won't be doing any trading on NFP or the day before, no CPI or the day before, and no trading FOMC. If a clear setup presents between 7 and 8:30 on one of these news events, a trade can be taken. So ICT had kind of mentioned that there can be some cleaner price action before the party starts. So review the last days, open, high, low, close. I like to look at the candle ranges between the last 5 and 7 days. I'm kind of looking at the size of the candles. Have we had smaller candles? Have we had some large expansion days? Normally after a large expansion, the range is smaller. So that might be a day that I may just look for like a 3-handle move or just not trade at all. So looking at the previous day, was it an inside or outside day? So also kind of keeping maybe some of the targets that I'm looking at for my bias, 20, 40, 60-day look back. If we're in the middle of the week, kind of check out the weekly profiles, potential daily profiles, noting just the new week opening gap, new week opening gap actual, and new day opening gap. And then opening, I think I have opening range gap. Opening range gap. I'll always check the dollar just to see if that still aligns with my narrative bias. Noting any high time frame analysis, the 15, the 1 hour, the daily, the weekly. So if you don't have those levels, you're basically trading blind. you may see a 15-minute, fair value gap, but there's no fair value gap on the 5-minute. It's still a valid entry, as the lower time frames are subordinate to the higher ones. Our 15-minute is our bellwether chart, so we always want to keep this visible to not lose ourselves in the 1-minute candles. Also, I'm looking to the left of where price is currently painting. I'm looking for the nearest short-term high or short-term low, and then I like to set alerts on there, just because I'll normally sit down, look at my chart, and then if it hits a certain level, I'll be alerted and I can hop back on the chart. So normally in the beginning of the day, we want to see some rally on stops, then break down, create displacement with a fair value gap, move away from it, and then rally back up, and then sell off, and then the reverse if you're bullish. So at the 8:30 a.m., we always want to try to anticipate the Judas swing. So normally price will start moving the opposite direction of where it's going to end up going. So waiting for buy side or sell side to be taken, or trading down into a higher time frame fair value gap. And in that fair value gap, you want to note the consequent encroachment, the 50%, the 25%, and the 75% of those gaps. Waiting for some explosive movement away with displacement. Swing high, swing low taken, or a higher time frame fair value gap traded into, and it rejects, where price enters into a higher time frame fair value gap. ICT had mentioned that this can also be equivalent to relative equal highs. So the fair value gap or below 50% of the displacement range, make sure when using the fib that you're measuring for the most recent impulse swing. So that's the most recent high or low, and that in the direction that you're trading. So the most recent swing high or low. Optimal trade entry, it adds confluence if those setups are within that range. Check the smart money technique, or SMT, at important swing highs or lows. See if there's any crack in correlation with the daily bias. So you must have a daily bias and what price is trying to reach for. That's the only way for this to actually be helpful. Otherwise, you'll find what looks like an SMT divergence, and then it disappears and starts to move in tandem again. So the times that I'll try to check, like the NASDAQ and the dollar, 8:30, 9:30, news event releases, important swing highs and lows, and then higher time frame fair value gaps. This just kind of outlines what we're looking for. And SMT will usually occur at 9:30 when there's already been an early run before or at 7 to 7:30 Eastern. So you'll look for a retracement for an entry after that happens. So once you're in a trade, I like to, if I'm bullish, down close candles should be supporting price. And if you're bearish, up close candles should be supporting price. If the move isn't at least 10 handles, it shouldn't be considered an entry. And then he also notes, like, it's okay, like if you're trying to get a feel for the market, it's okay to use, just to put in a contract, just sell, short, or buy, and just see kind of how you feel, just to see what the market's doing. So there's nothing wrong with entering in a demo, just try to get a read on the market. At the 9:30 Equities Open, I'm noting the opening range gap. So you'll toggle your regular trading hours with the electronic trading hours, if one exists. So there could be a likeliness to gravitate and fill that during the 9:30 to 10 opening. So if you don't know what your bias is, wait until the opening range is fully open. So wait until 10 to even consider taking a trade. Note any fair value gaps that form between 9:30 and 10. They can be utilized throughout the day, and these are important. These are important fair value gaps. We're still learning more about this from ICT, but he did mention this a few days ago. So during the lunch session, I'm either looking for consolidation or looking for a retracement. So you can pause this and read it. And then that's basically it. So yeah, so these are kind of, it's my like pre-market routine, all of the things that I'm kind of looking for. It seems like a lot, but once you kind of start going through, like I normally get most of this stuff done in like 15 minutes. So, and I still kind of have an idea carrying over from the previous night. So, yeah, so I hope this helps. Like I said, we're doing attempt number 3, so we will kind of see how it goes. But thanks for watching and following along.